Welcome back. It is July 29th, 2025, Tuesday. So tomorrow morning through their X account as well as email, YieldMax will be releasing the Group D distributions as well as their weekly options that are paying out distributions. I just want to jump on quick. Misty is coming out of Group D, but this is for TSLY and FBY. TSLY is part of Group A. I just wanted to show quick that for those who own Tesla, you're interested in fund positioning. The in-depth tab is live on my site here, which I'll link in the description below. But basically my intention here is, let me zoom out a bit so I capture everything, is I'm trying to illustrate exactly what the fund owns so you understand what strike prices they're selling, what strike prices they're buying, where their synthetic is structured, where the stock price currently is. So you can see today, as far as Tesla, we got a stock price right around 321, and the relative magnitudes of the strike prices they have sold in order to generate options premium, we show those right here. You can see the stock price is currently past a few of the strike prices they have sold at 317.50 and 320. As far as what that means for you if you own the fund, I guess it's not the worst thing. These are collateralized by the synthetic. So if it goes by it, that is okay. However, the gain your synthetic would normally capture by the stock price going up, because if we remember, the synthetic does mimic what the underlying stock would do as far as gains and losses. So therefore, when the stock price rises and we rise past the contracts we have sold, we do cap the upside of our synthetic. That said, we still got these other strike prices out here. So as the underlying stock price, that'd be TSLA, rises, we're still capturing gains. However, they continue to be capped slightly or by a percentage basis as you pass these contracts that we have sold. That said, if the stock price really runs, the YieldMax team does have kind of insurance contracts bought way up here on the upside, starting at 342.50 and ending at 355. So basically this approach is called selling credit spreads, where they sell contracts at lower strike prices, but then buy contracts at higher strike prices, so that if there is a huge move, they only get capped by kind of the difference between these two. So that's Tesla. This is from a contract perspective. If you want to see it from, maybe I got these other tabs, position percentage. So let's give like a percentage. This is a percentage of the ones they have sold. Like you can see 11.2% of what they have sold is at the 317.50, and 23% is at the 320. So then everything else is above that. Or if you want to look at it from this perspective here, what I got is, instead of the contracts, like the number of contracts, I'm trying to look at the value of the contracts. So you can see that like this one at 320 is basically acting as a drag right now of 5.7 cents on the Tesla fund. So that's just another perspective. And then as far as fund makeup, let's just go to a per share basis. So here's the Tesla stock at 790. Then we also got the synthetic, which is adding quite a bit, 89 cents. Because you can see here, why is the synthetic adding? Because you see the synthetic is structured at 290 and 295 basically. And the stock price is well above it. Therefore, the synthetic's adding quite a bit of value to the ETF price. And then currently, the other contracts are actually a negative 16.5 cent drag on the fund. Why is this? Once the stock price starts crossing these contracts, they become worth more and more, clearly. So if the stock price continues to move higher, I would expect that negative value to increase. So the negative value will increase, but so will the synthetic. It will also increase. It will increase at a rate of what the stock price is increasing, the underlying stock pricing, minus what they've already been capped at. So if it keeps going up, the synthetic will increase in value at a faster rate than the other contracts will decline. But yeah, I guess that's Tesla. And then I just wanted to note the other one, not a super highly held fund, but Facebook's or Meta's been a pretty good fund. Just as a quick digress on a slightly different topic, you can see that the price plus the cumulative distribution may be best seen by this all VARs tab. So if you were to start at 20, we're following the purple line for total return. We're all the way up to 33.02, largely driven by, or it's actually almost equally driven by what the currently ETF price is and what the cumulative dividend is, as those two amounts have almost equaled each other. So it's been a pretty good fund for those who have owned it since inception date. As far as what it's holding currently, it's not as big of a fund, so the structure is probably a little bit more simple than some of the larger funds like Misty and NVIDIA and Coney. But I guess we got the stock price, which is actually under than synthetic in this case. The synthetic is structured at 725. Stock price is under that, so I would expect when we go into the fund makeup per share that the synthetic will be a negative drag on the ETF value. Meta does report earnings, so it looks like they push these sales out a little ways, which I guess makes sense to me. If you expect Meta to report good earnings and the stock price goes up, you don't want to be capped too low. But we got the 745 and the 750 sold. Then we also got upside of the 785 and 790. So if Meta were to run up to 800, we are capturing that at the 785 and 790. So let's jump into the makeup per share. As I noted, the synthetic value is a slight drag, -6 cents right now. The other contracts are -18 cents. So in this case, the ETF price is actually lower than their cash and cash equivalents that they have on hand at the moment. From a usage perspective, I don't know if I cover this in TSLY. I'll go take a look at that really quick once I'm done with this. But Meta has 2,550 contracts that they have collateral via their synthetic that they can use as collateral to sell options against. They have all of them written out, which means they have zero remaining capacity. And then additionally, they do have a 100% of insurance, which means they did 100% credit spreads where they sold a call, but then they also bought a call at a higher strike price. So what am I saying by that? I'm saying every contract they sold here, they also bought a call over here, 1-for-1. So 100% insured, that's at least what I call it or how I think of it. Maybe you think of it differently, but that's just my terminology. And then finally, just looking at the fund market cap, as I know, not a huge fund. Are we at 180 million? If you want to track funds, you can always do that at my YieldMax kind of homepage where I got the summary table, but then down below you got the market cap size. And let's see if we find FBY. So there we go. It's 180 million basically in fund size. You can see it's relatively nothing to like the big time Misty and NVIDIA, for example, but it's in line with most of the other funds that aren't those huge funds. So just something to point out. And that's what I have for Facebook. I did say with TSLY quick, I just wanted to take a look at their usage, or I call it the synthetic usage risk, which means, okay, you got your synthetic, which got 35,708 contracts that you could use as collateral. TSLY is using them all. So I should say that they got a remaining capacity of 0, which means they got call options written out using their entire collateral, 35,708. That said, they got 24,868 contracts written as insurance. So they got a 70% insurance rate. So that's currently how their synthetic is being used. And so I say this total insurance is probably like a breakdown between, are they doing naked cover calls, or they're not naked, they got the synthetic as collateral, but are they selling a call option? And then once the synthetic passes that call option, they're basically 100% capped at that point. Or are they doing these credit spreads where they sell a call and then they also buy a call? And if synthetic rises above both of them, they're capturing gains again on their synthetic position. So that's what I tried to highlight in this tab, just show that breakdown. Anyway, there's TSLY and FBY, which have been recently added. Of course, those should update on a daily basis if you want to check them yourself. But thanks for tuning in.